So this is just the last part of the Melba. We'd finished with those notes. We've done everything out there. You're moving on the same as you would for the sole trader. You're moving on to the P&L and balance sheet. Nice and quickly, I'm going to go through them. I'm going to go through them quickly because there is no major difference between this format and the sole trader. Sales, cost of sales, stock, and purchases. So cost of sales obviously being our title. This is our opening stock. Our purchases, cost of goods available for sale, but it's just adding the two together. Take away closing stock. This is our cost of sales, gross profit. Most important part of this is the same for sole trader, is to make sure that you take the correct figure from your workings. I'll give you an example of that. Purchases, the figure that is in, and this is the marking scheme that I've just copied and pasted here, is 1,066,000. So I'm going to go up to the notes, and we have, if you were to obviously be looking through your copy, you can see that you would have done a note in note number 4 where you would have adjusted purchases, and you'd have got 1,114,000. Now you could have circled that in your notes, and you could have written in trading profit and loss and transferred that figure in without looking for the rest of your notes and finding that we went on to change purchases again. So obviously this is the figure that was included in the marking scheme because it includes both adjustments. So that's, in short, what I'm trying to explain to here is that you need to definitely make sure that the figure that you take from your notes is the final adjusted figure. Purchases, creditors, debtors are the three most common entries that need to be changed multiple times. You're always going to be changing purchases and creditors more than once. Closing stock can be the same as well sometimes. Debtors is quite common. Other ones not so much. But obviously it's important to take the last one, obviously, because you've put in the work, you've done the note already, you might as well transfer it in. There is one mark going for this as well, just as a reminder. Sometimes people get a little bit too focused on the time element and they skip simple things. You can just see that there's a mark going for the title. Not every question, but there is. Admin, selling and distribution. This is the same as sole trader. So when you're looking through this, I would always learn off the selling and distribution. There's maybe 6, 7, 8 things that can go in here. Learn off those lists of things. It's the exact same as the sole trader. Learn off the list of stuff that can go here, and then everything else just goes on admin. We would have saw depreciation for delivery van is S&D. This is our loss and disposal. Bad debts. Bad debts are to do with trading. Advertising is to do with advertising a good that you're about to sell. So therefore, the cost comes as a direct or indirect result of you selling. And this last one here is sales commission. So just to go through the advertising here, in the question I've just given you, advertising needs to be adjusted, but in this one there was no adjustments needed. Make sure when you're doing these that you go back. Okay, so we've got down to gross profit, and we're doing expenses. I know expenses are debit figures, so I'm going to go back through my trial balance. I'm going to scan through here. This is an asset. This is going to be needed at the bottom. Stock we've dealt with at the top. We've already changed this around. So you go through each of these and make sure if I haven't changed one of them, and if it's an expense, then I need to put it in. I haven't changed advertising, I know it's an expense, I need to put it in. So just make sure you go through the debit side for the expenses, and then obviously credit side for income. So the sales commission was that last note. As I told you previously, when we did that last note, we would have circled it S&D and the creditors within 1 year. Admin, then the rest of your expenses. This is our loss on the our loss by insurance, our loss by compensation. It was to do with this guy here. The stock, which cost 6,000, was destroyed. The insurance company agreed to pay 5,000. The 5,000 is a current asset, but the difference between both of those figures is the loss, because we didn't receive the full. We ended up losing out as a result of the fire. But it's a loss by compensation, as I said previously in the notes. When you're writing it in here to your P&L, I would write it as that. I would write it as loss by compensation. or lost by fire even, because the second you start to write damaged stock, you're going to think here, because stock would more or less have to do with selling and distribution more often than not. So this results from a loss from the insurance company, so it's admin. Depreciation of buildings is obviously always admin unless you're told to apportion it. Salaries is always admin. Patents written off, the same as goodwill written off, is always admin. This is the same as sole trader, so I'm kind of going through it a little bit quicker than I would a new question normally. The operating income is important. There is operating income, and then we basically only have two of them here, and then we see investment income coming after. Same as we previously would have done for sole trader if there was investments included, and it's also the same as published accounts. This is a non-operating income. Profit on sale of land and investment income will go below operating profit. So you'll put these are both non-operating forms of income. We've dealt with this before. I'm just going to remind you every time because it's a common mistake. The normal forms of income we would have had were the discount and the provision for bad debt. This is a reduction in provision for bad debt. We did this in our notes, and I think the discount is just there's no note next to it. Discount's just going to be on the credit side because it's a form of income, and we see this here, the third one. So it's obviously just taken straight from the accounts because we didn't have to adjust it. So there are my two operating incomes. I subtotal them, and then I have my non-operating income and expenses. First one being investment income, and the second one being debenture interest. Exact same as mortgage interest. Now, only difference between sole trader and company. Sole trader profit and loss would have ended here on mortgage interest net profit. Whereas for company, well, the sole trader might have had the balance from last year as well, which you'd have included. But for company, we're going to have dividends. Dividends paid goes in next. So dividends paid, and this is the same as published accounts in the same format that you'll see. There's no taxation, but the rest of it is the exact same. You have your sales, cost of sales, gross profit. You've admin, selling and distribution, operating income. Then you have your exceptional items, your investment income, debenture interest, or profit on sale of land as well if it was here. We don't have the taxation, so normally in the published accounts you'd have net profit before tax, you'd have profit after tax, and then you have dividends, and then retained profit from the first of the first, and P&L at the end of the year. So this format is actually going to be the exact same as published accounts. The actual only difference between it is instead of just listing admin and selling and distribution operating income and listing cost of sales, you're just showing the breakdown. But if you actually think back and compare the two, they're the exact same format. So again, you have your investment income and your debenture interest. Take away your dividends. This is the subtotal, and then you take your profit and loss from last year. Again, I'm always going to say, just because it's important, it's a common mistake. My P&L from last year was on the debit side, therefore it is an expense, not income. If it is an expense, it's a loss from last year, which means it needs to have brackets around it. It's a negative figure. So my P&L balance at the end of the year is minus 10,000. Balance sheet is even more straightforward. This is the same as sole trader. For intangible fixed assets, instead of goodwill, it's patents. We have tangible fixed assets, cost of accumulated depreciation, net book value. I don't recommend doing 4 columns. You can if you want. You're not required to do it, and sometimes I think it can get a little bit messy. If you do 3 columns, then I would recommend you always have to start with intangible assets, by the way. So put your 20,000 here for intangible fixed assets, and then have these totaled up as normal, but this total will be a little bit off because you'll have 20,000, 686, and 169, and this will then be 875,075, and then you'll have your investments, and then you'll have your normal balance here in your third column, 1.225 million. So again, this is the same structure as before. Again, this is going to be the same. Stock debtors less provision for bad debts there in the first column, so that you have your subtotal here. This is your insurance company agreeing to paying the 5,000. We circle this in our notes and wrote current assets. Investment income minus the investment income that we've received is the investment income that we have yet to receive. Again, we've done it in the notes, and we would have adjusted this in the suspense note. Our VAT was on the debit side, therefore it's an asset. The creditors, again, this is the same as what we've seen before. We have bank overdraft creditors. Commission due, this is to do with the managing director, that last note. So when I went through this previously, it doesn't come up too often, but when it does, this is how you deal with it. The managing director needs a bonus, and we have it in as a selling and distribution expense because it's to do with sales. The amount is to do with sales, and it's also a liability as we have agreed to pay, or sorry, they should be paid. They haven't been paid yet, so obviously we have yet to pay them. We owe this money in the short term. Debenture interest due, same as investment income due. You just provide for the debenture interest that is yet to be paid. Finance by, nice and simple as well. We have our debentures. This is our same as our mortgage, same as the loan, goes in first. We have our capital reserves using this format here. We have our authorized and issued. Authorized is hidden here up at the top. There's generally actually a mark going for this. Authorized capital of 1.5 million divided into 1.1 ordinary shares and 400,000 preference shares. So they were my authorized figures. I'm putting them in. 1,100,000 authorized for ordinary, 400,000 authorized for preference. How do I get my issued? Well, I look at it here. My issued shares for ordinary was 500, for preference it was 300. So my issued for ordinary is 500,000, and then for preference is 300. This is my capital reserve. My capital reserve is just sneakily thrown into the question here at the bottom. It's a reserve figure. Reserves figure go in the finance by. We actually haven't seen that before, but I have a kind of guided brief on this where I've included stuff like that. So this capital reserve figure is on the credit side, making it a long-term liability. It's money that we've kind of saved up for later on. It's a form of our financing. So this 45,000 goes in at the bottom, the same way you would have a revaluation reserve going in the finance by section. So the capital reserve here is at the bottom. Not in every question, but it is in some, and then we have our normal P&L figure. Overall, it's quite similar. The only changes we see in the balance sheet really are the fact that there's a couple, this here, but this isn't very common. Just maybe the fact that there's a couple of new adjustments like these guys here that we haven't seen previously. And for the P&L, it's quite the same as the sole trader, except you have an extra bit at the bottom here because you've dividends. Same format as published accounts. So overall, it's not too difficult, and over time, once you've done many of these questions, it's quite repetitive. But in general, it's quite similar to sole trader anyway, so it shouldn't be too much of an issue.